Hello and welcome to CFO Central. I'm John Jenkins. During the next few minutes, we're going to unpack one of the questions from our community and talk about how that impacts their business from an accountant and tax point of view. So let's dive in. So this week's question comes from Felicity of Bend the River, where they provide leadership and workplace relationship coaching. Felicity is looking to do something wonderful by offering up her time in exchange for charitable donations, and she wants to know, is it better for individuals to pay her first and then she makes the donation to the charity, or would it be better that the individuals make the donations direct to the charity? There's plenty to unpick here, so let's go through this from a tax and accounting point of view. As the old saying goes, there are only two certainties in life, death and, well, taxes. There's not a lot I can do about one of those, but at least I can try and help you with your taxes. But what has taxes got to do with being charitable, you might ask? Well, now we're going to find out. Okay, so let me break it down for you, starting with corporation tax. Your company can pay less corporation tax when it gives money to a charity. The value of the donation can be deducted from your business profits before you pay tax. So, in Felicity's example here, she may gain income of, say, £1,000 from the charges to the individuals. If she pays that £1,000 over to the charity, that will get deducted. So the net effect is nothing on her business. So she's not going to pay tax. She's not going to earn any tax back. So overall, no charge to her from a business point of view. There are some payments that you can't deduct when paying money over to charities, and these are in limited situations. So if you're making a loan to a charity to be repaid, if there's some condition attached to the charity, such as they're buying property from your company or anyone connected, and also a distribution of company profits such as dividends, but that's definitely not the case in this situation. Finally, if there are any benefits attached to what you're given in return for your donation, such as tickets to an event, they must be below a certain value in order to not be added back in that tax computation. Then finally we have VAT, a bit of an odd one. So I know Felicity isn't VAT registered, so this one's not necessarily for this situation, but it's just to give you the full facts of the situation. If you provide a service to a customer free of charge, it's normally deemed that there's no business supply, so no VAT is due. Brilliant. But if you've bought something in the supply of those services where VAT has been incurred, so we've purchased some items that make up this free service, we wouldn't necessarily be able to reclaim the VAT because we haven't made a supply when we've sold those items. What you can do, of course, is therefore pay VAT over on the supply of your service as if it had actually happened. An example of this might be when you go to a restaurant and you get comped some drinks at the end of your meal. The restaurant would have claimed VAT when they bought those drinks. They will have to pay VAT on the sales price to HMRC as if they'd made the sale to you in the first instance. So as far as HMRC are concerned, there is definitely no such thing as a free lunch. There are lots of other things to consider if you're gifting equipment or trading stock in relation to VAT and capital allowances. But that's outside the scope of what we're talking about here. We're talking about providing services in exchange for charitable donations. So if you are gifting equipment, stock, items that you've purchased, please look into that in more detail, because there may be other things that actually you need to take into consideration. Do a bit more research in that respect. Okay, so in respect to Felicity's situation, we've talked about corporation tax, VAT, tax implications. Now we're going to get into the nitty-gritty of the the admin side of things, just to bring things back to reality. So we are doing something good for charity, but what about the admin that's involved from our point of view? How do we record this information in our books? First thing we're going to have to do is we're going to have to raise an invoice to the individual. Then we're probably going to have to chase them for payment. Then we're going to have to pay that money over to the charity and make sure that we're paying over everything that we've received. And then ultimately we're going to have to record all of those items in our accounting transactions. Now, Felicity's talking about a donation of £40. She wants to try and raise £2,000. So, that's 50 lots of outs, 50 lots of ins. There's potentially a lot of work there that needs to be done through. And then on top of all of that, Felicity's probably going to have to explain this stuff to her accountant and bookkeeper, because these types of transactions are going to be outside the norm of her usual business transactions. So they might pick something up there. Alternatively, if the individual was just to pay the donation direct to the charity, Felicity would set up something like a Just Giving page, and she'd be able to look at that and see what has or what has not been paid, and check that the donation is being paid before she provides that coaching service. So taking into account what I've said about corporation tax, VAT, administration, no surprises that I'm leaning towards letting the individual pay for the charitable donation themselves. After all, charity starts at home, and that means looking after your administration and not having to do any more work than is absolutely necessary. Good luck, Felicity.